Craig McDonald. I'm the Chief Business Development Officer for Trustly here in North America. I think when you say cards, we have to look at debit cards and we have to look at credit cards. Both are utilized by consumers with merchants. Those payment instruments are used by different demographics and they're used in different proportions based upon the merchant category and based upon the price point. And so they have different cost parameters associated with each one of those. So what merchants gain with Pay by Bank? Why should they care? They're going to care because Pay by Bank, provided by Trustly, is a guaranteed form of payment. It's a debit product at its core. However, what we're able to do, because we have a secure consumer authentication with the bank, because we have that level of visibility, and because it's really just a two-party model. It's between us and the merchant, and there's no acquirer, there's no network, there's no issuer processor. We're able to drive approval rates higher than debit and credit cards. That's one. Secondly, what we're able to do is we're able to provide a price point for that debit product which is materially below that of debit cards. So what that is that we can provide it for 50% the cost of what a merchant would pay for a debit card transaction. Then the question is, well, what can the merchant do with that savings? Well, most of the merchants that we're currently engaged with, marketplaces, grocery, petroleum brands, QSR, home goods, pharmacies, etc., they all have loyalty programs. And so they're also competing over a fixed monthly budget. And those loyalty programs are there to be able to incent just that, loyalty and frequency for their consumers. And so if you have a product which costs half of debit, so you can take half of those economics and then you can drive that into an enhanced loyalty program which you're already providing to your consumers. So you can provide X points or 2X loyalty points for the consumer to get them to be more loyal to your brand and shop with you more frequently. And so basically what it looks like is Target Circle Card in a box. And it provides all the benefits that you've seen in the press related to Target Red Card, which is when they provide the 5% cash back when you use that decoupled debit card, then those consumers, if they have X number of shopping visits per month and they had given, let's say 30% of those visits to Target before they join, now maybe they're going to give them 4 visits, right? Or 40% of those visits. And so that has a material impact in terms of, the revenue and the CLV that they have with each one of those consumers. So Pay by Bank, with all of those parameters or with that construct, is an unlock for CLV. Because we can provide it at half the cost of debit, they can provide that. And so that's not even counting the benefit that potentially they can get credit card payers, which would then be probably 4, 5, 6 times the cost of a Trustly Pay by Bank transaction to adopt as well. And so they have massive cost savings from that perspective, and they have CLV increase. So that's why merchants should care about Pay by Bank from Trustly. Verizon has a CLV for each one of its subscribers. And so the math in terms of they providing discounts on the monthly bill using Pay by Bank, especially because they know what the underlying cost of payment is if you're using debit or credit or Amex or what have you, then it makes the math super easy. The consumer feels that they're getting something, and in fact, in the case with Verizon, the value that they're getting from Verizon in terms of that monthly discount, a subscriber may look at that and say, well, if I'm a debit card user, this is a no-brainer, and if I'm using a credit card, this is better than the airline points that I'm getting. So again, if you're half of debit on a guaranteed basis, then that you're freeing up economics that then you can deploy towards what you really care about as a merchant, which is loyalty, frequency, and CLV. Having connectivity to online banking with the secure consumer authentication, it not only provides us with the ability to provide merchants with a debit product which is better and half the price, but the consumer provides Trustly with permissioned access to their bank account and the data that sits behind that. We effectively have visibility in terms of all your demographic information, your income information, and we have detailed information, especially if you're a debit card top of wallet payer. We know where you shop, we know how much you shop, where, how much you spend, and that's a value that we can bring to our merchant partners, coupled with that 50% discount on debit, which then their marketing team can ingest and really provide personalized engagement with their shoppers, such that they may know now that Craig shops at these other competitive merchants on this basis in this pattern spending so much. And now what they can do is with that data, they can provide more personalized incentives and encourage that shopper to come and shop more at that brand versus their competitors. We can marry together all the demographic information and the income information along with detailed spend, on a debit card basis, everywhere that consumer spends. So, even if you're providing 2x loyalty, all you need to believe is that by providing 2x loyalty, you're going to increase the CLV for each one of the shoppers that adopt Pay by Bank by 1 or 2%. If you can increase the CLV by 1 or 2%, you're already in the money. And based upon what we have, research, is a double-digit CLV increase, is not a single digit, which allows the merchants to be able to drive up CLV, and they do that through the cost savings and the approval rate advantages that Trustly Pay by Bank provides. The permission data or online banking data as a category is already kind of in its, we're going into our third decade, right? Started it back in 2000. You've got, Trustly, MX, Finicity, Plaid, Yodlee, and others. Hundreds of millions of US consumers have already linked their bank account and shared their data with third parties such as Trustly. So providing that data from a consumer perspective to Trustly, so long as they see that there are proper safeguards in terms of that data, and if the consumer believes that they're getting value for providing that data to a company like Trustly, then there's no impediment. So if I'm a consumer, I'm paying with a debit card right now, I get 1x loyalty points from my favorite grocery store, and now all I have to do is link my bank account. It still comes out of my bank account. In fact, I have certain advantages where it doesn't come out immediately. In many cases, it comes out like the next day, or it could have come out 2 days later, so I get a marginal cash flow benefit. But now I get 2x loyalty just by linking my bank account. And so, it is, so long as the consumer knows that their data is safeguarded and they're getting value for actually sharing that data, then we don't see an impediment. With the Trustly Split token, that is a safeguard that we are extremely proud of and we think is kind of table stakes for this industry, whereby, we do not store the online banking username or password. We don't. So if our systems get hacked, there's no way for that intruder to obtain online banking username and password and to be able to go in and have an online banking account takeover. It just can't happen because we don't store that data. So from that perspective, we are head and shoulders better than any of our competitors, because all of our competitors, in fact, they store your online banking username and password in their systems. We encrypt it, we split it bit by bit, and then we retain half and we give the federated, give the merchant the other half. So if the merchant gets hacked, there's nothing that a perpetrator can do with that data. And if we get hacked, there's nothing that the perpetrator can do with the data. It's meaningless. And so it's incredibly secure from that perspective. We don't see third-party fraud. Why? Because online banking provides a measure of secure consumer authentication that you don't have with cards. And so a couple things happen in the card network. Because you don't have SCA embedded within the network, and because it's a 5-party model, then each one of the participants in that 5-party model is running its own risk and fraud detection algorithms to determine if Craig is really Craig or if this is Philip coming after, trying to pose as Craig. And so in that regard, mistakes are made. And so in some cases, there may be a decline when this is really Craig, but a participant in the card ecosystem made a mistake, in effect, and thought that this was fraud. With Trustly, a couple things happen. There's just the merchant and there's Trustly. Of course, the consumer is in there as well, but there's not an acquirer, there's not a network, there's not an issuer processor, there's not an issuer that are all kind of interrogating that transaction in a context where it's kind of suboptimal and there's no secure consumer authentication. With Trustly, you only have 2 parties. Trustly is in effect acting as the acquirer and the network and the issuer processor and the issuer all wrapped into one, but we have the consumer first fully authenticate themselves to their financial institution. And so what we're also doing is we're taking, in many cases, the PII coming in from the merchant, And then we're marrying that up with a PII that we're getting from the bank after the consumer performs the login, which is the SCA. And so what we have in our network, the payments themselves are extremely clean. So we don't have third-party credential fraud. We also interrogate those transactions very closely, or we may step in and do a secondary MFA. Before then, we say yes or no to the transaction. So it's just a more efficient network that we are developing, and it's more secure, and therefore, with that, we don't have false positives. So our approval rate goes up, right? And the economics for everyone in the value chain improves, and that's one of the reasons why we can provide this debit product for half of debit.